Tom Alexander, founder of Alexander Trading LLC, joining us this morning. Tom, welcome. Happy Friday.
Good morning.
Good morning to you. We were just taking a look at the U.S. dollar. I mentioned it has a big influence on some of the other products we watch here on the show, like commodities, specifically crude, one of the products you've got on your radar this morning. I can see why. I mentioned at the top of the show overnight up to 84.81.
Yeah, crude has been interesting. I mean, we made that V bottom almost off of near that 77.5 level, and we've been straight up. And now we are approaching the highs made back earlier in August. So crude is at a really interesting juncture here from my perspective. Let me pull up a weekly chart real quickly here.
Well, hold Tom, let me just 1 second before you get into the weekly chart, let me show that V bottom pattern that you're talking about here, and then I can put this into perspective in terms of where we are in that key area of resistance you just mentioned. So here we are again. Tom mentioned the V bottom off 77, bringing us right back up to this 80.49 level. Tom, here we are on the daily candles now, so you can see where we are in terms of that area of resistance you just mentioned. Go ahead. I'm sorry, I didn't mean to interrupt you, but the weekly time frames, what you have your eye on, you said?
Yeah, I like to, I think, as a, all traders want to look too micro, in my opinion, get
Absolutely.
Too granular, and you want to look out and see what's going on, because it's the bigger trends that really drive this market. And you had crude, retrace off of this area, come down to that 77.5 area, and now it's just screaming higher. And above where we are now, Ben, I really don't see much in terms of potential resistance from an auction market perspective until you get near 94, 93.85, 94, somewhere up in there. And that's back in the November, October highs of 22.
Yeah, we have that on our radar. I've been saying for a while, I feel like if we were to take out 85, that's kind of that next stopping point or that next big hurdle for the bulls here. Tom, you also, it looks like, have your eye on some rates as well, right, in terms of what's going on there and Treasury yields.
Yes. Well, and just looking at notes, which is obviously is the inverse of rates.
The future side of it.
It looked like we were going to break down below that 110.27 area. We broke down below it, bungee jumped back, and then cratered below. And again, it's a little bit like crude. Now all of a sudden this market has found interest rates, the notes and bonds have found this incredible bid. Now, per your last guess, we have a number coming out in about 10 minutes that could throw this
change
thing
anything.
Completely.
Right.
Yeah, could change. The interest rate markets, anything remotely, attached to interest rates, straight up or straight down. So you have to be careful here with making assumptions about which way this thing's going to go. I would choose to wait for the next 12 minutes, and then I'll tell you what happened.
Tom, I like it. Tell me, after a big bungee jump like this, whether you're talking crude off 77 or we're talking 10-year, the bonds on the left, the 10-year on the right here. So again, we're looking at futures. I'll pull rates in a second, obviously the inverse. But when you see a big bungee jump off a key area like this, I mean, what do you look for in terms of the next couple days, couple weeks? Obviously, again, to your point, today could kind of throw a monkey wrench into everything, but where do we go from here, basically?
Well, when you have the quote unquote bungee jump, what it is from an auction market perspective, it's rejection. It's rejecting a price level that became unfair to either the buyer or the seller in this particular
instance. And you can see that because we spent a limited amount of time down there relative to some of the other areas on this chart here.
Right. So it makes that area incredibly important going forward. But notes and bonds are in a position where there's very little quote unquote resistance from an auction market perspective until considerably higher.
Okay, and
so that would mean lower yields, higher notes and bond prices.
Absolutely. That's where I wanted to go next here, was taking a quick look at the yield side of things. Again, because we always remind our viewers and make that very clear, right? Those who are new to futures, we're talking about the future side of things in terms of treasuries driving yields higher here as treasuries, again, have been on the move lower here. Talk to me here, talk to me, Tom, about what we're looking at here in terms of some of the indices, some of the products you're watching there.
Well, it's pretty simple. If you pull up a chart, the market is making higher highs and higher lows. This is a remarkably bid U.S. equity index market. These recent lows now are going to be very, very important. But again, this market is remarkably bid. If you pull up a chart of any of the indices going back to October, with a little bit of exception of the Russell has a different structure along the way than the other three. But this is a market, Ben, that continues to be bid. You can, the attribution changes from one moment to the next, but the reality is buyers are stepping into this thing. I mean, we had a less than a 6% pullback, and now we're back off to the races. Apparently, we'll find out here in about 10 minutes. Short term, I think we're stretched, but per your last guess, I mean, we can get more stretch. They can take this thing straight up from here in the next 10 minutes.
Tom, short-term stretched. As I take a look here, I'm seeing a bit of a consolidation area at the upper extreme of this range. I should say at the upper extreme of this trend that we've been in here. Bottom left to top right is very well defined. But again, we're kind of losing momentum, right? After posting the highs for the year, we did come off. But kind of getting back to our conversation before, we've got a bit of a double, maybe one could argue a triple bottom down here. And again, that retest of this 4360, 4370 area, we didn't spend a lot of time down there, right? So as we work our way through the middle of this range, I oftentimes say that lends itself for a retest of the upper extreme of this range, especially if we get energy and momentum through the middle of it. Do you agree? I mean, is that kind of a byproduct of the rejection of that lower level? I always say, if you can't go up, the market likes to test down, and consequently the opposite. If you can't go down, oftentimes the market likes to test higher.
Oh, totally agree. We could be the market is at a point here. It's sort of hard to read because the potential paths in terms of development this thing could take are numerous.
As always is the case, though, right? I mean,
yeah. Sometimes it's a little more binary than it is now. I don't know. I don't do the fib thing, but it looks like we're maybe a little bit.
Tom, is that partially because we're just in the middle of this range, right? So
exactly.
We're not in an extreme right now, so the possible outcomes are a little bit less clear, maybe.
Right. We're up. I think we've had up closes 5 or 6 out of the past 6 or 7 days. Breadth has been positive 5 or 6.
To your point, a little overextended, as you mentioned.
So short term here, but the thing that's going to change that here in a few minutes is this number. So,
Noted.
We could have a really wide range, another really wide range day up, and then that's your momentum peak. And so maybe we get back up into that 4,600 area and churn around a little bit before you get your next big move.
Tom, you use some keywords and some terminology, I think, that's very specific to price, and it's very specific in terms of helping us see things and envision what you're talking about. Extremes, right, which I think you're talking about these high inflection points. We really want to have heightened awareness as we're at these areas that have tested and spent very little time. But now that we're kind of in the middle, I sort of think of the word balance, right, that comes to mind here, and which makes a lot of sense, right? We're kind of a meeting of the minds, as I've heard you reference it before, between the buyers and the sellers, which is, in theory, the market's job, right? Is to really bring us together. So in theory, most of the time, we're going to spend in that balance phase where price is kind of random, not a lot of conviction one way or the other. But the catalyst comes from the news. The imbalance comes from a big number if it were to come out of whack, right? Away from what expectations are today. So imbalance right now, but to your point, this number could stir things quite a bit here.
Oh, yeah, absolutely. And from a trading perspective, I mean, this number is exciting for me because you're going to get an extreme out of it one way or the other. I'm not one that wants to guess what this number is going to do heading into it. Now, for your more sophisticated traders, maybe you have some sort of delta neutral trade using options futures. The permutations are endless there for your sophisticated traders. But the best trades occur at extremes, and the best trades occur at different extremes.
Absolutely.
So we have a short-term extreme here, but it's bumping up against this number, which I think is going to make things even more extreme one way or the other. So it's going to be great opportunity here maybe early next week, one way or the other. So I'll sit back and watch and wait for that.
Nice thing about sitting back, watching and waiting, and not competing with the high-frequency algos and traders ultimately is you do get to step back, you get to let the market do the work for you and follow the trend, right? And ultimately, you don't have to be as quick to the gun or on the trigger ultimately. I appreciate your thoughts here, Tom. A very good perspective in terms of what to keep an eye on in terms of a few markets to watch, as well as we lead into and gear up and ready for this jobs report here, which is headed our way in just about 2.5 minutes. That's Tom Alexander, founder of Alexander Trading LLC.